Well, it's regrettable. I think my view is that governments should regulate, should make sure that regulation is properly implemented and respected, but not intervene in market dynamics. So I think it's a major mistake. Unfortunately, it's not just this government. There is a long tradition in Italy of interference in financial dynamics. So I think, unfortunately, it's a continuation of a trend that we have seen in the past. And it is negative for a number of reasons.
Just how negative is it? I mean, when you look at the share price moves today, you've got Intesa Sanpaolo down nearly 7%. I can see Banco BPM down more than 6%. Is all the negativity being priced in here, or are we just at the beginning of a lot more selling to come?
Well, the risk is that it's just the beginning. As you mentioned before, it's not just Italy this morning, it's also China. But I think the decision in Italy could have consequences. First, if you tax windfall profits for banks today, nothing prevents the government from doing the same in the future on another sector. So, that is negative for financial markets. So asset valuations will suffer. Secondly, I think in terms of investment activity, how can you attract investment if you then tax, in a kind of subjective way in the banking sector? By tomorrow, again, it could be another sector. Third, I think taxing banks can be dangerous because in a situation in which you need bank lending to finance the recovery, then it could have implications for credit to the economy.
Lorenzo, there is another argument, though, that deposit betas for Italian banks have been extremely low. As the ECB have been hiking interest rates, banks were quick to pass on the higher interest rates to people who wanted to take out a mortgage, but not quick to pass on those interest rates to depositors. And actually, Italian banks have one of the lowest deposit betas out of all of Eurozone banks. Perhaps, in essence, what the government is trying to achieve here is for these banks to pass on more of the benefits of higher interest rates and the costs to some of their customers. So what is the best way for them to go around achieving that?
Yeah, I think, again, it should be about regulation. So making sure that the market is functioning correctly, but not really taxing, because taxing implies that the market is not functioning well, which is to be proven, in my view. Now, I think the problem is twofold, actually. One is on the mortgage side, and the other one is on the deposit. It is normal, I would say, when you have a cyclical upswing in interest rates, to see the interest margin to widen. It has always happened. Now, you can argue that maybe it has widened a bit too much, but it is normal to happen that. And secondly, I think the mortgage problem, Italy has a relatively low mortgage market compared to many other countries. So basically, a lot of houses do not have a mortgage attached to them. And secondly, the majority of mortgages have shifted to fixed-term interest rates, and so they are not really suffering that much as interest rate rises. So, and banks were prepared to kind of intervene, extending maturities and provide some support to clients. So I think this thing is a bit overblown, in my view, and unfortunately will have consequences.